Hey, good day, everyone. My name is Jeanmonod, Regional VP of Sales here at Angel Oak Mortgage Solutions. We'll get started here in about a minute and a half. Today, this is a little different from if any of you have joined us before. Thank you for joining us again. This is different from our deep product dive. This is really who are these non-QM borrowers and how to find them. And I'll introduce our subject matter experts here in about another minute. So we'll let everyone log in. Looks like we're going to have a good crowd today. This is really interactive. We want you to ask as many questions as you can, and hopefully we'll answer them on today. And if we don't, a recording of this will go out before end of day tomorrow, and we will assign those questions to the proper AE. So we'll get started here in about another 30 to 45 seconds. Hope everyone's having a great month. Again, this is being recorded. We will get this out before end of day tomorrow. Everything we're doing today until the end is going to be driven from this PowerPoint. We will send this PowerPoint out to you before. That will go out with the recording of this. So we'll get started here in about 30 seconds. A lot of people still logging in. Holly's saying she can't hear me. Eric, Carlos, can you guys hear me?
I can hear you loud and clear, John.
Holly, check your audio. Okay, Lynn can hear me. Thank you, Lynn. So, Holly, it might be your computer. So, okay, loud and clear. Thanks, Tori. Gerald, thank you. All right, let's get started here. It's a couple minutes past the top of the hour. My name is Jeanmonod. I'm a regional VP here of sales at Angel Oak Mortgage Solutions. We have two subject matter experts. I'll introduce Eric. Please introduce yourself.
Eric Morgenson, Angel Oak, here to make you money.
That's a great introduction. Eric, you've been here how many? 10 years now at Angel Oak?
Yeah, absolutely. Just solely focused on this non-agency lane, and I'm telling you, it's time to get rich on the niche.
Ooh, I like it. I think we're going to hear a few lines from Eric today. Something tells me he's wound up. And Carlos, I get to work every day with Carlos Betancourt. Carlos, please introduce yourself.
Hey guys, it's Carlos from I'm out of Miami, Carlos Betancourt. I've been with Angel Oak for 9 years now, and like John, I have a nice little booklet, and I'm gonna take notes on Eric's little one-liners. I'm gonna go ahead and save a lot of those, so you guys may want to do the same.
Yeah, this is a little different from, and again, my name is Jeanmonod, Regional VP of Sales here at Angel Oak Mortgage Solutions, and I will be celebrating my 9-year anniversary next month. So between the three of us, we have almost 30 years of experience just at Angel Oak Mortgage Solutions, not including the vast majority of experience that we have in the lending business. So hopefully, you guys are engaged today, ask a lot of questions. I know a lot of people have responded, they can hear us. So again, this is being recorded. We will get this out to you before end of day today. This is a PowerPoint presentation that will be included. So let's get started here. Advance the slide here. Just a little bit about Angel Oak. We've been around. We've been originating non-QM loans for over 10 years. Market leader since 2013, and again, the largest originator of non-QM volume, almost $3.5 billion. All right. I love this slide because this slide really tells you what the true potential of non-QM, non-agency business is. And if you look at this graph, I'm going to move a few things around on my computer here so I can read some. If you look at, I'll do my best cousin Vinny imitation here. In 2004, 2007, you can see that non-QM space was almost 32% of the total originations. And guess what? We all know what happened in 2007 and 2008, right? So it got a little bit out of whack, the percentage of non-QM to overall production. And now you can see what happened in 2008 and what happened in 2009 and 13, and where, Angel Oak stepped back into the non-agency, non-QM business. We're only about 2%. Well, the opportunity And like Eric said, it's to make you money. The normalcy of where Angel Oak and non-QM lending should be about 10%, and we're only running about 2% of a total origination. So guys, there's a huge market cap, and I forgot to do a poll in the beginning of this. I jumped into it, but I'm going to hold off here a minute. I kind of got a little out of touch here. So let's launch a poll and find out how many of you have originated a non-QM loan in the last 12 months. So while we're doing that, just sorry, I got a little out of pace there. So let's, did we launch the poll? Eric, Carlos, can you see it?
Yes.
Okay.
Yep.
So who has originated a non-QM loan? Wow, a lot of you on here. So 63% of you have originated a non-QM loan in the last 12 months, which I'm shocked, because when we do these deep product dives, it's usually completely opposite of that. It's about 80% have not originated a non-QM loan. So this is great. That's probably why you're here. You want to find out more about finding these borrowers. So let's get back on track here, Jeanmonod. So the most common products in the non-agency, non-QM space are bank statements, right, for self-employed borrowers, debt service coverage ratio programs for investors, whether they're new investors or seasoned investors, and then just missed, those full doc borrowers maybe who just can't qualify. Maybe there's a couple of dings on their credit, or maybe it's a jumbo loan. And then we have loans for that life event, that credit event, or maybe it was COVID that halted them in some credit blemishes. And then we have the no income, high asset. That's our asset qualifier. And we're going to cover highlights of those programs as we move through this presentation. But this, we're going to talk about who are those bank statement borrowers. And this is probably, I said that last slide was my favorite slide. This slide is my most famous slide for those self-employed borrowers, because if you really look at that spike in 2020, so in 2020, new business applications grew by over 24% over 2019. So you see the spike here, right? And then in 2021, new business applications grew over 2020 by 22%. So this is a huge opportunity. There are, and Eric always says this, there are more self-employed borrowers out there than there are VA borrowers. So just think about that. This is the fastest growing segment of self-employed people, and good part of you, 65% of you are originating these loans. So Eric's going to kind of talk to us about, where to find them, who are they? So Eric, take it away.
Thank you, John. So let's get right down to the meat of the matter and where to find these people. I love the fact that the producers on this call right now, a lot of you guys are tenured about these non-agency loan programs. So now where do you find these people? They're everywhere. Any business that you're ever visiting that's a small restaurant or even a mom and pop market, they don't know these programs exist. Now, here's the beauty of a bank statement loan. Not a lot of W-2 wage earners are out there swinging at $1 million, $2, $3, $4, $5 million home. 100% they're self-employed, taking advantage of our U.S. tax code that happens to be 75,000 pages. So you have two types of borrowers in America. You have W-2, full doc, and then you have a different set of tax code for the self-employed people. You see, our tax system, our tax code incentivizes people to go take a chance and start a business. So they get a lot more write-offs, but their accountants do not know that these programs exist as well. So you guys, they're everywhere. Just when you're out there going to a small business, find out who the owner is, let them know you're a client, they're going to talk to you, and ask them, geez, are they interested? Number one, are they a homeowner? Number two, if they are they interested in maybe buying another house, investment properties? You guys, they're everywhere, but it starts with you having that conversation.
Yeah, Eric, we say professional building services contractors, realtors of every self-employed loan we close here at Angel Oak, 9% of those are realtors. And that's your referral source for everyone on this call. So anyway, so Eric, give us some highlights of our bank statement program.
You guys, don't overthink bank statement programs out there. Don't overthink it. Here's how simple it is. The self-employed person does need a 2-year runway of self-employment history. Not a big deal. So what you do is you simply fill out the 1003, you run credit, and you literally give us 12 or 24 months of either personal or business bank statements. And we go to work, often same day, we go to work and let you know exactly what the monthly income is for your self-employed borrower. It's really that simple. We do all the lifting. We'll even do that on a TBD property. Now, let's say you have a scenario and they're self-employed, but it's wonky in some way. And you certainly haven't spent the money running credit. You don't maybe have a fully baked 1003 yet, but you're wondering, I wonder if these guys would even have a look at this thing. Call your Angel Oak AE. We love scenarios. We love walking you through how to get a yes for that borrower. Don't overthink it. That is my advice.
Yeah, Eric, I kind of always say, if you gave everyone on this call tax returns, you'd have it calculated, 10 different ways, right? But and as Eric, I really want to make sure everyone heard Eric, we calculate that income for you up front, and 30% of the loans we close here at Angel Oak don't meet our guidelines because of people like Carlos and Eric are so seasoned that they know the second, third, fourth level questions to ask. So we've got a couple of questions coming in here, Carlos. Can you use, I'm going to ask Carlos a question. Carlos, can you use 2 sets of bank statements?
Yeah, John. So we can use, not for the same business. So if we have a ABC transport company with maybe bank statements in the same bank or 2 bank statements in different banks, we typically don't use those because 99% of the time there's a lot of commingling of those funds. Account A sends to B, sends back to A. There's a loan that goes back and forth because the customer's running their business that way. So it makes it very difficult for us to truly give you an accurate income review. But what you could do is you can use 2 businesses. So if our borrower has that transportation company and also has a puppy supply store, I don't know, landscaping business, absolutely. 12 or 24 months of one, and then 12 or 24 months of the other. So we can.
Thank you, Carlos. And Eric, what if you have a co-borrower who's W-2'd and your borrower, you have a co-borrower W-2'd and another borrower who's self-employed? Can you use both incomes?
Absolutely. And let's say the self-employed borrower also gets Social Security income. We can use that as well. Oh, let's talk about they also have rental income coming into their personal account. Yes, you guys, here's the deal. There's no way you can possibly put down in guidelines all that is the human element out there. That's why we're not good at it. We're great at literally getting you a yes on finding out what is that particular borrower's self-employment income. And this is what we do. And by the way, we do all that lifting for you.
Yeah, again, if you know, this is kind of my public service announcement, if you know you are going to meet with a self-employed borrower, right, and you're going to try to go down that traditional route of tax returns, right, why not ask them for their bank statements? Because a lot of the deals we get, you finally have the tax returns and you realize they don't qualify, so now we have to go bank statements. If you know up front you are meeting with a self-employed borrower, get their bank statements and let us go down that parallel path with you, and we'll increase, and I think Eric said this earlier, we'll increase their purchasing power in most cases, probably 3, 4, even 5 times as much. So we've got a lot of great questions coming in here. Carlos, Brenda's asking, can you use bank statement program? And this is a great question, Brenda, thank you. Can you use bank statement program if they only own 13% of the company, Carlos?
Yeah, so unfortunately not. So if you need to be at least 25% owner on a personal account or 50% on your business to be able to use those bank statements. So then we may suggest something else. Maybe we can look at a 1099 option. There's maybe other ways to structure it. But I want to go back to something Eric said a couple of times to make sure nobody misses it. I think I know there's a lot of lenders out there that are new to the market and are promising things, and they're offering. Everybody offers a bank statement loan now. Now it's not that unique as it was when we did it. We started back in 14 and 15. But I think something Eric said is key. This is all we do. So I get calls all the time, and it's funny, not funny, but it is funny when we tell you so many times, go to the experts, because the expert knows what questions to ask and how to structure the deal. These deals are more about structuring, not about rate or a score or maybe an income. So if you go to an expert like Eric that knows what to ask, your chances of getting that deal through are much higher than if you go to another person that may not know what questions to ask because they just started at said company 3 months ago, and the deal is being underwritten by an A-paper underwriter who's then sending it to another investor to really do the final underwrite, and then the deal kind of unravels itself and falls apart. But hey, you got that eighth off the rate that you thought you were going to get, but now you don't. So again, the point is, guys, I always say it, but some people just don't, it doesn't filter. Let the experts do it. We do this every day. Your A-paper shops, A-paper lenders are good at A-paper. We're good at this. This is what we do every day, morning, noon, and night, and on the weekends. So let us handle this part and let us approve your customer. So there's my public service.
Yeah, Carlos, spot on. And Carlos is even being more modest. It's the experts like Carlos and Eric that they pre-underwrite this file up front, basically. And Eric's partner in crime, Bob, they pre-underwrite this, and if they have any questions, they'll go to a help desk. Carlos, any of our A's, no one is producing a pre-qual that they are not 100% confident that loan's going to close. Period. End of discussion. And we know how this works. You've got referral sources, right? So we know that your commission check, their commission check, everyone's commission check is on the line when they do a pre-qual. And I'm not trying to over dramatize this, but they know what they're doing. They close loans. Let's get back to a couple other questions. Eric, what kind of expense factor do we use when it's bank statements, right?
What we're doing is we're putting on common sense glasses and we're looking at the whole picture of the loan. So the expense factor is we give it a default 50%, meaning we give every business a 50% profit margin right off the top. That's quite liberal, isn't it? What if you have a business that has 7 locations, maybe 270 employees? Well, a 50% profit margin would be a little bit too liberal on that. So with that said, we're going to give them a 70% expense factor, meaning a 30% profit margin. Folks, we're here to get you guys a yes on these loans. And as they mentioned, we're giving you a full income and credit underwrite right up front, even on a TBD property, so you can bank on that approval. So if you have let's say a real estate agent has 0 overhead. The broker of record is paying them into their personal checking account. So on a realtor, we'll give them 85% of what they're depositing into their checking account. So you guys, we're here to get you a yes. So it's all case by case as we analyze what type of self-employment income does your borrower have. And again, we're doing all that lifting for you right up front.
Yeah, so Daniel, hopefully that answers your question. And Megan has a great question here. Carlos, when would you use 12 months versus 24 months?
Yeah, great question, Megan. I think that that choice is going to be always left up to, I always have that conversation with the broker directly and have them ask the borrower. Sometimes a 24-month bank statement has a slightly better rate. So there's your answer. In this market that we're trying to be as competitive as we can on rates, let's get to 24. Sometimes 24 doesn't work for some reason. and then we can elect to go 12, at least 12, but we can do 24. And like I said, let the scenario dictate which one we want to use.
Yeah, so we talked about, how many people have become self-employed over the last 2-3 years, right? So maybe their business is just getting started, right? And now they've got their second year in the books, and man, it's taken off. Carlos, Eric, any of our great account executives would say, hey, let's go 12 months and let's drop off 13 through 24 because that's taking the weight, the average income down. We'll just use 12. Again, your account executives will handle this all for you. Sonia, I hope Stacy didn't pay you to say this, but Stacy Flanagan has 100% pull through. That's what, so Sonia, thank you. So I figured Stacy would weave her way into this webinar. This is great questions. Yes, Daniel, that is an aggressive expense ratio, so love it. Yes, Rob, we talked about this. You can piggyback W-2 income with the bank statement program. So, and we're going to move along here. We've got a lot of questions being asked, great questions. So, Eric, you touched on who these borrowers are. Let's talk about where do you find them?
Again, they are everywhere. Now, here is currently right now in this market, here's my favorite referral source, a CPA. All you loan officers out there and us with NMLS license, we have to have our 8 hours of ongoing education every year. We're in a class where you can take it online, and we learn all about all the regs in our business. Well, accountants have to go to a quarterly meeting, so 4 meetings a year, plus they have a 2-day class to maintain their certified public accountant licensing. In those classes, they're not taught about what is known as ATR. That stands for the ability to repay. You see, baked into the Frank Dodd Act is a new regulation to prevent from another financial meltdown from happening. Is we got to prove on owner-occupied and second homes, we have to prove the borrower has the ability to repay that loan. That's not a hard thing to do, but CPAs don't understand this. CPAs are all sitting on a database of self-employed clients. Think about it. Who's self-employed out there doing their own taxes other than an accountant? So here you got a CPA sitting on a whole stack of self-employed clients that possibly are not homeowners. Folks, what is a CPA's favorite tax deduction? The mortgage interest tax deduction, of course. We're the only country in the world that allows it. Can't do it in England, can't do it in Australia, can't do it in Canada, can't write off the interest of your home loan. We can here. Accountants love being heroes, to their clients. And for somebody that's currently renting, that's self-employed, writing off, I don't know, you can tell the IRS you have $36,000 a year in annual income and turn around and buy $1 million house at 90% LTV, never any mortgage insurance, never any prepay on these. Are you kidding me? Once an accountant learns this, now when they're dealing with their clients, they're going to say, hey, Eric, you really really ought to buy a house. You need to go call Carlos, or you need to call John. Now, do you think when my accountant tells me to call a loan officer that they can possibly get me into a house? Are you kidding me? I'm going to get on the phone and start grinding them on rate? No, folks, this is such an emotional business that we're in. That is the home run Mac Daddy of all referral sources. Think about the high trust that a client has with their accountant, who knows where all their financial bodies are buried. Folks, I'm telling you what, if you haven't talked to your own accountants that these bank statement loans exist, do it today.
Yeah. Hey, Carlos, anything to add about, realtors, other LOs, anything regarding where to find us?
I think overall, the whole point of our presentation today is where to find just these borrowers in general. And I think that unfortunately, loan officers do a poor job of marketing themselves and letting people know their entire suite of programs. They kind of get into the focus. They go laser focus on FHA conventional, just the govy stuff, the agency stuff, and they have these other loans in their toolbox that they don't talk about. So I know some loan officers would mention, well, I only get FHA. well, I'm like, do you get conventional? No, I only get FHA. I'm like, why? Well, because I market myself as an FHA specialist, right? So that leads to the fact to like the my point to say, well, hey, maybe if you talked about conventional, or VA or whatever it is. So I think, you also don't want to be, what is it, jack of all trades, master of none, but we are, all of us are, right? So I always want to say, include these programs when you do your presentation, when you're talking to your customers, when you're talking to trade organizations or anything like that. So they know that I don't only just do Govy stuff. I do, like Eric said, self-employed, this large part of consumers that are right now being underserved. You have a solution for there. And just like Eric hit it out of the park, like usual, they're not rate sensitive, because once you sit down and you talk about what they would have to pay to file versus paying a slightly higher rate that you get a mortgage deduction on, right? And no mortgage insurance. I mean, it's really very simple. And one more kind of from I think the bullet points that we're looking at here. I know a lot of my top producing branches always have one or two contacts in these large savings, regular banks, right?
Yep.
The Wells and the Chases and all these banks that don't offer any of these loan programs. And that, personal financial advisor, whatever they're called, they don't want to lose your banking relationship. Mr. Smith, you got Smith Landscaping, we do business all the time, and you have this, we do all this for you. But if Mr. Smith happens to go somewhere else that closes a loan for them, Mr. Smith may pull all his business because that's the competition, right? Bring it over to me. So I think a lot of loan officers don't tap into that resource, which is that large bank or banker that sees all these loans that don't have the program for, and kind of have to turn them away. So that can be a fantastic dynamic asset for you.
Yeah, Carlos, you hit on really good points. Same with Eric, and Eric touched on it briefly. So, and Carlos mentioned no MI. We can go up to a 90% one loan, no MI with a 720 score. So, that's big. Not having to put, and that's where you come into your financial planners, right? Your financial planners don't want people pulling out more money to put more down payment. So, again, Carlos, Eric, any of our account executives across the country will help you market this. And Eric's going to have the pleasure of taking us to our website at the end and show us where all these great tools to help you do this. So we're almost half past the hour. I want to be respectful of everyone's time. And there's also, this is just one example of a business directory where you can find, businesses. So we've answered a lot of these questions. Are these loans too difficult to do? They're not. We're going to do that, like Eric said, the heavy lifting for you up front. We're going to calculate your income. We talked about business accounts. We talked a little bit about personal accounts. Your account executive is going to coach you on which way to go. 1099, we do them. We talked about a couple times, one borrower having a W-2 transfers from one account to another. Carlos touched on that. That we don't like that commingling of funds. Again, W-2 businesses with zero expenses, the minimum we'll go down to is 15%. So anything else? Carlos, one quick question about a prequal. How long does it take Angel Oak to really produce a prequal?
Well, I think speaking for myself and Eric, who's a master at it, I think what sets us apart is, like you said, we jump into the file, and I always love to speak to my loan officers directly about the scenario. I'm going to ask you 9,250 questions for the sole purpose of understanding the file. I should be able to honestly do that pre-qual in 2 minutes. Once I understand the file and I understand what we're doing and why this is a fallout or we have to go with a certain program, that just the actual part of putting it together takes Eric, again, 2 seconds. So, but that, we need your help there. We need you to provide us with as much information as we can to understand, to give you that quick no, a yes, or even a quicker no, right? Sometimes we don't want to say no. We get paid on saying yes in closing, but we also want to make sure that when we stamp that pre-approval, like John, you said it earlier, that's a relationship the loan officer has with the buyer, the realtor, and all the other referral partners. So if they're coming to us, we understand the trust you're placing in us. So we take that very seriously. We don't want to do a loan for you or submit something that we're not sure about, that if it falls apart, then we're talking about a loss. Forget the commission. You're talking about a lost relationship. Maybe it's friends and maybe it's a family member, you know. So we take this very, very, very seriously, and we stamp that pre-approval. You know, you can take that to the bank. And I would say one more thing here. The first bullet point, are these loans difficult to do? They're not, right? So you have an account executive, a seasoned account executive that didn't start working here 3 months ago. You have Eric Morgenson that can take you from A to Z, from the entire underwriting or the pre-approval or the scenario to the closing. So you got that aspect of it. But I always say, I think the number one feedback that I get sometimes from brokers, it's not that these loans are difficult, and I want to always establish the right expectation. It's that you're coming to us when that loan is already, there's an issue. So you may be outside of the 30-day closing window or 45 days, and there may be an issue. Now, they're going to lose the deposit. So you're coming to us, the loan may be on fire then. So it's not that the loan is difficult to do, because it's not. You know, I would submit to you that doing these FHAs with all these overlays and this and that and the incomes and all that stuff, my humble opinion, I've been in the business for 24 years, and those are tougher in my opinion. But I always would submit to all my brokers, they're not more difficult to do. It's that you're coming to us with so much pressure that it feels like, it's tougher, or there's more stress, So again, I want to say it's not difficult to do. You need somebody to help you with it from beginning to end, like Eric, like our team. And again, trust me, you'll see that they're not easier to do. So.
Yeah, thanks, Carlos. I'm going to do a shameless plug. Next week, same times on May 18th, we're doing a deep product dive into bank statements, which are 65% of our production are bank statements. And again, it's self-employed borrowers. And Eric, you get a shout out here from Jen. Eric actually helped with my personal loan last year when I was with a different broker. So Eric, your reputation precedes you. So again, this is being recorded. We will get this out to you before end of day tomorrow, along with the PowerPoint. And if we don't get to all these great questions, your account executive will get your question answered for you. So Carlos, you're going to take us through. I'm getting feedback here, but Carlos, you're going to take us through the debt service coverage ratio. But I just want to hit on a couple of highlights here. 34% of the homes are rental properties, and 70% of those are owned by individuals. So Carlos has a famous line. Carlos, what's the rate on rent?
100%.
There you go. So and then we listed the top 10 most expensive big cities for home rentals. And obviously, Eric, you're in California. Carlos is out of Miami. You can see the other states listed here. This is another fast-growing segment of the lending industry. So, Carlos, go over the highlights of we call it internally our investor cash flow, but everyone in the industry knows it as a debt service coverage ratio program.
Yeah, so thanks. Before I forget, I'm going to lead with the fact that we are now able to close these same DSCR loans or investor cash flows for non-licensed individuals, for licensed individuals that are not licensed in other states where you're originating the loan. What does that mean? If Eric has a broker in California, they're not licensed in Florida, Eric can do that loan from his branch in California and close the loan happily in Florida because he has some investors moving over, and we can do the same thing over in California, right out of your same branch, same office, same loan application, same process, everything. So that's a new thing that we launched, and maybe you guys want to talk about that later, but yes, we do that. So our investor cash flow or DSCR, very simple. I'm sure everybody here has done it or talked about it or knows about it. It's investors only, investor properties only, and the main focus of this program is it's a no income, no employment loan. So no tax returns, no pay stubs, no income analysis, nothing, zero. All we want to know, or we want to see, is that the rental income per the appraisal, covers my mortgage payment all in 1-to-1. I'm looking for that factor of 1-to-1 coverage. Now, we could get deeper into it, maybe in another class or another time.
The next slide, Carlos, sorry, the next slide will show them the ratio. So we can.
Okay, so there you go. So we'll do it next. So it's basically like I said. So bullet point number 4, no limit of properties that are currently financed and the customer has currently financed. So I actually like it when a customer has 3, 4, 5, 6, 7, 8 properties because they understand this program better than anybody, right? They understand cash flow, net, gross rental, net rental, all that stuff. So we don't have to or the broker, you guys, loan officers, don't really have to sell it too much because they understand it. Now, something very important, this is for investment properties only, okay? So this is kind of something that's very tricky sometimes. So the customer has to own their primary, okay? Or have a history of currently being a landlord. So technically they don't have to own their primary. If they have other investment properties, that's okay. But just like Eric said earlier, this program is because it doesn't have ability to repay or the ATR requirement. We want to make sure we don't do this program for a person that's going to move into it. And then now your 1003 says that this is a non-occupant co-borrower, a non-occupant borrower. They move into the property. Now we have a occupancy issue. So we want to always stay away from that, okay? The loans can close in an LLC if you like. They don't have to, but you can. We do have a 40-year loan available with 10 years IO, so 120 payments IO, then the next 30 years P&I. And it says foreign national available. And we can also do this program for foreign nationals, which we do a lot of.
Yeah, so thanks, Carlos. Great. We'll show the next slide here. I've got a couple of questions. Is there an additional cost to close? Carl's asking, is there additional cost to close the DSCR in an LLC? Eric, you want to take that?
No, we absolutely can invest in an LLC. There are some parameters around it, limitations on how many members in the LLC, but yep, absolutely. We'll close, vest it in an LLC. That's not a big deal.
And then Carlos, a couple of questions here from Carl again. Thank you, Carl. Assuming that he's assuming that we allow short-term rentals, and maybe touch on condo-tels, Carlos, which was just rolled out.
Yeah, it's a great question. Thanks for asking that. We will look at certain properties, single-family homes, condos, or whatever. There's certain markets where the prevailing type of rental activity is short-term, right? Not long-term. So yes, we will allow that Airbnb type of short-term income to be considered for the classification. So yes, and now as of a week ago, I think we rolled out our condo hotel program, which of course it's all short-term, basically, right? Nightly, weekly, or whatever. So it allows your customers to say, you know what, I'd rather not really be in that condo or that property all the time. So once I'm not using it, I'm going to go back home, wherever home is. I want to rent it out. I want to let the front desk handle it, manage it, rent it, and I just want to see my profits. Absolutely. So now, as of last week, we're able to offer that condo hotel program up to 75%.
Yeah. Thank you, Carlos. Eric, is there a prepayment penalty on these?
Yeah, on non-owner occupied, there's a standard industry 3-year prepayment penalty. You can always offer the borrower a 4-year prepay, which actually lowers the rate. You can buy out the prepay, but you just can't go lender paid comp and buy out the prepay completely. Borrower paid comp, you can, not lender paid comp.
So Terrence, we talked on that. So if Terrence is licensed in Georgia, right? Congratulations, and wants to close a loan in Florida. We have 10 states right now, Terrence, that you could close a loan in that you don't need to be licensed in. And stay tuned, we'll probably be adding more in the months to come. So, but there's only 10 states right now that we would allow you to close a loan that you're in a state that you're not licensed in. So, Carlos, we're getting a lot of questions on the SCR. Kind of just cover this, and just I want everyone to know, every one of our programs is a purchase, refi, cash out, delayed financing. So we can do those on all of our programs. So go ahead, Carlos.
Yeah, so as I mentioned earlier, this program, right, no income, no employment, no tax returns, no bank statement analysis. It's all going to be based off your 1007, right? The market rent provided to us by the appraiser, right? Typically, remember, that's an extra 100 and something to the appraisal, but they'll provide us with that report and they'll let us know what that market rent on that property is. Once we get that, we can see how much of that debt service is being covered by, of course, by the rental. So standard, we want the one-to-one coverage. It gives you there the LTV maxes, cash out maxes as well. Now, once you go under the one-to-one down to 0.85, okay, you also have the slight adjustments there to the program. This is the one that I always kind of lead with, because I know in this market, last year the rates were half of what they are now, right? So last year we found that a lot of these properties, debt service, they covered a lot more often. Now sometimes, unfortunately, that one-to-one ratio isn't there. So we do have a feature, which is the last one you're seeing there with the no DSCR, for you to actually sidestep that DSCR requirement. Okay, so if you have a property, especially on the short-term rentals, that say, hey, you know what? They're getting so much money on this Airbnb or short-term rental. It's such a great deal, but for some reason on the stable market comp 6 months to a year that we're looking at here, it's just not renting out as it doesn't look as nice on paper, basically, if I could say that, right? So the customer understands that. So we say, you know what? It's such a great investment. I'm willing to go under the DSCR coverage and take money out of my pocket, even though you're not. Because you know that once it hits the short-term rental market, your profits are going to be fantastic. So that's why we do have that option for you to waive that DSCR coverage. Okay?
Yeah. I mean, these are really, the biggest thing is getting that, that rent comp analysis. That's kind of the only thing there. So let's. I know we're getting close. Let's talk to Carlos. Where do you find these borrowers? And I know Eric has a lot of ideas too. So Carlos, kind of just, what are the ones where you see your customers finding these DSCR borrowers?
Yeah, so I see a lot of, I have a customer. Yeah. Got a lot of states that are feeding our Florida real estate market. We thank you for that. But I think I have a couple of good brokers. I got this idea from them actually. What they actually do is they go to in their local neighborhoods or whatever, and they actually approach the community. I'm trying to find the name. Everybody kind of has like a different name, like a tourism board, and with a lot of these guys, if they actually target market to certain neighborhoods. Kind of funny, they say, yeah, they'll if you live in New York, for example, they'll target a certain area or a certain part of the state where a lot of migrants come for, visitors, second homes, snowbirds, whatever. So what these brokers of mine have done is they've actually reached out to these people and marketing people, especially through social media or whatever, and they partner with them to let them know, hey, you've been visiting Florida for 20, 30 years. Why don't you just buy a second home or an investment property here using this program, no income, no employment, and add to your real estate portfolio, and eventually you get it paid off. And then when you're not here, rent it out. So that's a cool little trick there that they discovered and they do very well.
Eric, anything else?
Here's what's working right now in this market. Everybody on this call has a local or even a newspaper. In the real estate section, having an ad that says, are you paying hard money rates on your investment properties? So this DSCR, we call it the investor cash flow loan, can be 2 to 3, even more than 3 points better in rate, okay? Stick with me. Hard money loans are normally a 1 to a 2 year balloon. Why? A hard money lender, or I'm sorry, private money lender, wants to charge the borrower 2 points every year or two. We don't charge any points. So for you to do a hard money loan officers out there, the hard money lender is going to charge 2 points. You maybe want to charge 1.5 points. There's 3.5 points. The loan's only a year or a 2 year balloon. With this, 2 to 3 points lower, no points, and these are all 30-year fixed rates. So therefore, that the borrower isn't getting whacked over the head every year or two with a 2-point hit fee. So literally go out there and get people out of hard money loans and into a much softer loan program and go to the bank. Now, here's where we do need hard money. We want to see a 660 FICO, and we need the properties to be in at least average condition. We can't do one of these loans on a property that is a complete train wreck. and we need the borrower to have decent credit. But that's it. There's no income. There's no debt to income ratio whatsoever on these loans. Easiest application you could ever take. Leave the income for the borrower blank on the 1003. Limited amount of finance properties.
Yeah. And just for everyone's education here, SOI is your sphere of influence. So just to help everyone there, because, you know, I see it every day. You know, people are, you know, I've got friends, they want to own real estate, right? And this is easy. And it's not just for, as I mentioned earlier, it's not just for seasoned investors. It can be a first-time investor, as Carlos mentioned, as long as they own a primary. So kind of in recap here, you know, no personal income. Eric just mentioned that. We don't even want job information. These can close absolutely quicker than the average loan. The biggest thing is just getting that appraisal, right? We don't care how many number of properties they have financed. You know, usually, you know, Fannie Freddie, it's 10 financed and then they're done. You know, I will tell you this, you know, these usually come in multi-packs, right? You know, like Eric said, taking a couple of houses out of hard money and putting them into a couple of DSCR loans is great. Yes, we do 1031 exchanges. No TRID rules apply, and we do non-warrantable condos. And Carl's asked a couple questions on non-warrantable condos. The biggest thing for us with non-warrantable condos, the first question I always ask is, what's making that property non-warrantable, right? And usually it's the concentration of investors, and we don't care as long as one entity doesn't own more than 20%. So non-warrantable condos are great. Carlos, Eric, anything to add regarding the debt service coverage ratio program?
Don't overthink it and get the word out to your referral partners that you have access to these loan programs. The effort equals the result equals the effort in your marketing activities, folks. Getting the word out is going to affect your personal checking account 90 days from now. Yep.
I'm going to write that one down too.
I would add to that, when now that I see here the exceptions are exceptions made. Exceptions are made all the time, and this program, just like the bank statement, actually allows mortgage late mortgage payments within the last 12 months, within the most recent 12 months, if you can imagine that. So think about it. You got a 1 times 30. I've done it with 2 times 30s in the most recent 12 months. So that doesn't disqualify. I could disqualify a Fannie for 5 years, but not with us. So there's just so much opportunity.
Yeah, Carlos, you bring up some great questions. Once someone sees a late on a mortgage, it's like, oh God, you can't do it. You know, call your Angel Oak rep. And we used to say, you know, call us when it falls out. Call us. We're going to tell you to call us before you do anything, because we want to help you market this. And we're going to get to a lot of great tools that we have. Eric, can you touch on our full doc? I know 90% of our business is done in bank statements and debt service coverage, but yes, we have full doc. So give us and we call it our waterfall of programs when it comes to full doc. And did I skip it? So Eric, talk to us about just missed jumbo.
So this is a just miss. So here is another niche in the marketplace. If I were to walk into Chase, B of A, Wells Fargo right now and want a jumbo loan, but guess what? I'm self-employed and I'm a risk taker. I'm optimistic, but I'm a risk taker, and I might have had a bankruptcy somewhere in my history. All money center banks are going to make me wait 7 years. Guess what? Old Jed's a millionaire again. I'm doing really well, and I can't get a jumbo loan because everybody is giving me the Heisman Trophy stiff arm. At Angel Oak, we think that's quite silly. Why not give somebody who's had a Chapter 13 discharge just yesterday, but kept up with their payment plan over the last 2 years? Where's the risk in that? So we can do a jumbo loan for somebody 1 day out of Chapter 13, 2 years out of a Chapter 7, not making them wait 7 years. And for the folks on this call, and you're all paid in basis points, we're here to get you rich on the niche. And guess what? You make a lot more money on jumbo loans than you do on smaller ones, obviously. So there's a segment in the marketplace that not a lot of people are paying attention. If you have a relationship with somebody at a money center bank at Chase, if they can't do the loan, they get to refer it out. That Jamie Dimon wants them to refer it out to 2 referral sources instead of just 1. Walk into a Chase bank, foster a relationship with that in-house loan officer, and get all of their declines. Folks, this is what's working right now.
Yeah. And then, the one thing I learned this, I can't believe I'm going to say I learned this from Leslie, Carlos, but the 1 year, the 1 year tax return is available. So similar to bank statements, you're going 24 or 12 months. This 1 year tax return is great because if you want to go, if you government, Fannie and Freddie require, if you won't use a 1 year tax return, I believe they require 5 years of self-employment, right? We only require that borrower is self-employed for 2 years. So, so just think about that. So we have another full doc program. I want Carlos just to cover some highlights on this. Carlos?
Yeah, John, I mean, thanks for bringing that up. I do a lot of business with that 1 year tax return. I forgot about that many years ago. It was like February, March, April, and all of a sudden, I think in 1 month, I closed like 11 or 12 1 year tax return programs. I didn't think of them. I'm like, why am I closing so many of these programs? And a broker might say, dummy, because you need only 2 years, not 5. So I said, wow. So light bulb went off. And since then, yeah, I always talk about that as a fantastic option that the customer, again, giving the customer alternatives, options. So this other Alt-A borrower program that we have is basically feeding off of the previous program, and it's for those customers that maybe don't have the same credit score as the previous one. Maybe they've had the late mortgage payments that we spoke about, right? Maybe they got hit with COVID, they lost customers, they had to close their business, they got ill, they couldn't work, they got into a divorce, some business went sideways. I like to call it, right? We like to call it the life event loan, right? Everything's not perfect. We can miss a mortgage payment, you get sick, you lose your job, you get fired. Life happens. So why, like Eric said, why are we going to have to make you wait, 7 years down the road for you to reestablish your life? That to us, I think, again, we just see a big opportunity there for that customer who's a great customer, but just something bad happened to them. We don't got. There's no reason to keep carrying that issue for the rest of your life. So this is your second chance loan that allows for, like I said, shorter seasoning with short sales foreclosure, deed in lieu, maybe for, like I said, issues with forbearance. DTI is up to 50%, guys. 40 in the front, 50 in the back. Pretty cool, That lets you squeeze out that purchasing power just a little bit more.
Yeah, Carlos, great points. Megan asked a question here, what's our best product for second homes? I would say bank statements or full doc, right? And then, Megan also, very active. Thanks, Megan. She has a self-employed borrower who's building a home, custom home, and has hard money loan. She says, I assume you could refinance using the bank statement, and absolutely, we'll get you in touch, Megan, with your account executive. So, yeah, Carlos, so you get this borrower in this home, right? They get it home, they build some equity in there, and that life event gets further and further in their rearview mirror. Who's going to refinance them? You, Mr. Loan Officer or Mrs. Loan Officer, right? So we used to call this a 2-for-1, and I don't know why we don't talk about it like that anymore. I've forgotten to talk about it like that. So it's a 2-for-1 loan.
And John, we've got this asked before. Unlike other investors, we do not solicit your customer. Absolutely, positively. We will, Eric Morgenson and Carlos, and we will not call your customer, hey, Mr. Smith, you did a loan with us last year, ready to refinance because the market has turned favorably and I think we can save you some money, and here's some marketing material and give us a call. That won't happen. That's your customer for life. So just want to add that.
So, Eric, the last of our programs, can you cover our asset qualifier? And, we don't do a lot of it, but it's just another tool in your tool chest. Go ahead, Eric.
Okay, this is a loan for somebody that kind of doesn't need a loan, but we have that, again, that ATR regulation, meaning the ability to repay. So let's say I'm walking down the street and last week I just sold my company. Woohoo! life is good. And now I am pretty flush and I want to go buy that house I've always been wanting to buy. And now I can do it since I sold my company. But guess what? Because I sold my company, I don't have any income. Now what do I do? Well, the asset qualifier is the perfect solution for that type of borrower that would appear to be an ATR violation, but it isn't. If you have somebody out there that really doesn't have a lot of income, maybe retirement income, but has a lot of assets, a big 401k, and they love using other people's money, contact your Angel OKE and we'll walk you through this program.
Yeah, thank you, Eric. And then again, where do you find these borrowers? We've talked about it repeatedly. Other LOs at large banks are not doing these loans. CPAs, divorce attorneys, as Carlos mentioned, there's life events, and sometimes with those life events come credit problems. And again, we're here to help you. Eric, I'm going to flip it here to, I'm going to close that and pull up our website, because Eric's going to take us through, which I think is the most powerful marketing that we have.
What John is going to bring up is we have marketing flyers. So whenever you meet with somebody or even sending an email, it's always best to leave them with something, a piece of paper with your contact information on it. John's going into our portal. So as an approved broker with Angel Oak, you guys have access to this. John, just go down to flyers for right now.
Yes, sir.
And this is how simple it is to customize a marketing flyer. John, if you don't mind going to the CPA flyer.
Oh, I'll go back to it.
Once you build out one of these flyers, that information overlays to all of these marketing flyers. Look at this marketing firepower we're offering you guys. But here's my favorite. We're now past tax season. Accountants are not slammed because, up to April 15th. And what an amazing referral partner. Can you imagine having 1, 2, maybe even 3 good CPAs referring all of their self-employed clients to you as a loan officer over the next 2 or 3 years? What would that do to your personal checking account? So here's the CPA flyer, and if John can blow it up a little bit, you'll see we're even showing the CPA how we go about the ATR regulation, how we go about calculating the income. See that? Clients can't maximize their write-offs and still qualify for a big mortgage loan, can they? Oh, yes, they certainly can now. So getting this, listen, everybody on this call has access to your local county association of certified accountants. Why don't you go to one of their quarterly meetings? Bring this flyer with your contact information on it and go introduce yourself to these folks and letting them know that you're a specialist with self-employed clients. What would happen to your personal checking account if you were to network with a whole series of certified public accountants? Think about it. The effort's going to equal the result. Your result will equal your effort in doing that.
I love it. Hey, Carlos, how much does this cost our broker to use?
I think it's free. I think it's free. It's available. And like Eric said, we'll walk you through the process, and we'll show you how to get it out there, and we'll show you how to speak to these customers. And by the way, I don't know if you spoke about it, but along with these flyers comes a great opportunity to do presentations. And if you have a local account executive in your market, we love to do it either in person or virtually, Zoom type of thing like we're doing now. We love to present to your sphere of influence and your referral partners. We love that.
Yeah, hey, and just so everyone knows, this is being recorded. We will get this recording out to you along with this PowerPoint presentation we use. Right now, obviously, we're on our website. Eric, let's talk about a little bit about social media too.
So we have these templates that give you a head starter, whether you're a pro with posting on social media or you really haven't done it before. We have all of this content. We've already written the script. You can just simply add to it your personality to what we've already written. And we've already given you such a simple head start that it yes, very minimal effort to start posting on social media. Again, folks, getting the word out that you have access to these programs is where the scenarios are going to start coming at you. And every broker check that ever hit your personal checking account started with a loan scenario. Again, I want to emphasize, you got a loan scenario, it's wonky, or you're wondering if we can do it, reach out to your Angel Oak account executive and let us walk you through this process. We are here to make you money.
Yeah. And then last but not least, Eric, let's talk about the Carlos touched on it briefly there. Let's talk about the presentation. I mean, this is top-notch stuff here.
Okay, so here's the deal. We have national coverage with our account executives. So go ahead and line up a realtor presentation, reach out to your local account executive and have them go co-present. You can introduce them as a product specialist. Often our broker partners will introduce the AE as an underwriter, and they will co-present. They don't bring any Angel Oak business cards or anything. They're representing you and your brand, and they're there to field any questions those realtors can throw at you. And if you put them in a room of 10 or more real estate agents for that presentation, after the presentation's over, one or two of those realtors are going to walk up to you and want one of these loans for themselves.
Exactly. I know Carlos agrees. I mean, he does them all the time. This is without a doubt the most powerful presentation. You could have your Angel Oak account executive present on your behalf. I kind of joke about it with our guys and girls that I go in there like the witness protection program. I'll take this lapel pin off. I don't say anything about Angel Oak, and we just say we're subject matter experts. We're just one of. I'll use Carl. Carl's asked a lot of great questions. I'm just one of Carl's investors, and I'm here to present non-QM, non-agency products on Carl's behalf, and that's it. And they drive everything back. The question gets back. That's why you're going to work with Carl. Carl has access to all these great programs. It is powerful, and as Eric said, you get 10 people in a room because 9% of the deals we close. You will get 9% of the deals we close are realtors on bank statements. You will probably get a loan for them for their own deal, as Eric said. I know we're getting near the top of the hour. This is being recorded. There's a short survey at the end of this. If you can fill it out, and we're always looking to do a better job and deliver better content. So, Carlos, anything else to add or in closing?
Yeah, call us. We definitely want to help you. Call the subject matter experts. Again, I encourage you to go on other webinars and talk to other loan officers, account executives, and go to trade shows. And I'm going to be humble, but not humble, John, just like I am. And I would say there's no comparison. You see for yourself the years of experience within our company that we know what a deal is. That is invaluable to you, and you should definitely consider where you send your business, especially these days that we don't have the pipelines aren't as big as before. Every loan matters now more than ever. So aligning yourself with the right account executive, the right company, I think is key to your success.
Yeah, Jen, I think Eric, you helped Jen out with her own personal loan. She says, and this is I'm going to quote you here, Jen, don't overthink it. Just do it, right? Don't. So Eric, in closing, anything else to add?
You guys here at Angel Oak, we have been at this a long time. We're here to make you money. Listen, 7-8 years ago, bank statement loans were hard. They were wonky. And word got out with, oh my gosh, you're doing a bank statement, well, you're going to ruin all your relationships on that. And it was hard. But after 10 years, you guys, we were doing bank statement loans before the CFPB delineated what was a qualified and a non-qualified mortgage, you guys. We've got this process down. Just watch who you trust your personal income with out there. With Angel Oak, we're going to pre-qualify every one of your scenarios right up front. Saves a ton of time. Try us.
Yeah. So thank you everyone for joining us. I know we're about a minute past the top of the hour, so we appreciate it. This is being recorded. Please take that survey at the end. Anything we could do better. Eric, Carlos, you guys, you know, there's a reason why you guys are top producers, but you're also, you're great friends, and appreciate working with you. Thank you for taking the time out of your busy schedules. For everyone on this call, thank you on behalf of everyone here at Angel Oak. Thank you for taking the time. For those who've closed loans with us, Jen, thank you. For those who haven't, please give us a shot. We'll earn your business, I promise you. Have a wonderful afternoon, and we look forward to working with you. Thanks, guys.
Bye, guys.
Bye.